If you look at the UK data, weak data last week, but then we had a surprising Bank of England meeting. So the data, manufacturing PMI in the UK's revised down to 48.0, again, contraction. And manufacturers continue to complain about declining export demand, labour market conditionings weakening, and firms citing weaker domestic demand. But despite all that, also weak passenger car registrations down 5% year on year. But the Bank of England came out and surprised, they had a revote, didn't they? They cut 25 basis points, but more hawkish than expected.
Yeah, and I think that's quite interesting, obviously in the context of a relatively high inflation environment. The fact that, they're deciding to cut despite inflation testing the upper limits and exceeding it at points probably indicates how worried they are about, the underlying situation in the UK. As the car data there said, I think we have a demand issue and yet we have high inflation. We have structural production issues and yet we have high inflation. So they need to do something. I think basically the UK is, I'll save the strong language, but the UK is not in a good position at all at the moment.
Yeah, the chart here is a daily chart of sterling against the US dollar. You can see it bounced last week from a clear double bottom, but to me it looks like it's in a downtrend now. That looks like it's setting up for head and shoulders, and again, the key support line you can see very clearly there. It looks like it will retest that and break lower.